The feeling in Australia at the moment with COVID-19 is really one of uncertainty. This isn't the first time Australia's been through tough times. The important thing to remember is that we will eventually get through this. So there's different drivers of every single economic slowdown that we experience. If we look at the 1991 recession, this was really driven by high rates of inflation and a high rate of current account deficit. We saw a number of businesses go bankrupt. In fact, a number of the large banks in Australia almost went under at that time as well. We saw the unemployment rate increase from 5.8% to 11.2% at its peak. In terms of the housing market, it was really mixed. We saw Melbourne, for example, saw falls in prices of more than 10%. On the flip side of that, markets like Queensland, particularly the Gold Coast, actually continued to see prices increase over that period of time. The global financial crisis, as it's known, was really driven by lax lending standards by banks, and ultimately this sent a number of banks in the US and around Europe into bankruptcy and caused a global economic meltdown. It was the greatest downturn in the US economy since the Great Depression back in the 1930s, and people couldn't access the finance that they needed. Pretty much all capital cities saw prices fall. The big thing for the housing market here in Australia is that concerted stimulus towards first home buyers saw prices starting to rise shortly thereafter. So it was a very short, sharp downturn in the housing market, and the recovery was also quite rapid. In terms of the housing market, it's really difficult to say whether this looks like the 1991 recession, whether this looks like the financial crisis. Really, this is a health issue. So whilst it's not an economic driver of this slowdown, the health issues are really having economic impact. And that's really the concern for the overall economy, that it will continue to shrink as people stay at home from work, aren't able to work, or lose their jobs over the coming months. The SARS outbreak in Australia was a pretty minimal impact. In fact, from a housing perspective, it had no real impact. Even worldwide, it was only about 9,000 cases of SARS. If we look at COVID-19, this is a much larger scale. It's affecting a lot more countries around the world, and we still don't really have a timeline for when COVID-19 is going to pass. The main point here is the real estate market doesn't necessarily need to shut down on the back of what we're seeing with COVID-19. There are ways around this, but we also know that confidence has really taken a big hit, and housing is a high commitment, high confidence purchase decision. So it's reasonable to expect that over the coming months we will see fewer sales, but I certainly don't think it's going to be as dramatic as what we saw during the financial crisis, or even as dramatic as what we saw in Melbourne during the 1991 recession. There is a huge amount of stimulus in the market. Interest rates are the lowest they've ever been. The Australian dollar has fallen off a cliff. So that's going to be good for exporters. The low interest rates you would think would be good for the housing market. And just more broadly from an economic perspective, once confidence starts to return and people start to spend, you'd think that the rebound out of this crisis will be quite positive.